welcome to this week's Week Ahead from ICM.com. So first we're going to start talking about the latest movers, what affected the markets during last week, and then highlight the top economic releases for this week and move to the MetaTrader 4 platform to try to detect some of the formed or forming price patterns. So still the COVID-19 implications of the economic recovery continues to be one of the key movers in the markets, especially on FX markets or stock markets. And there are some the recent development in COVID cases in the Euro region, especially in Germany and France. They are just triggering some alerts for officials to take some further steps. However, they're still trying to minimize their pressure on the economic activity in order to not face another drawback or drop in economic activity like we witnessed during the second quarter. So this is the thin line that they are still working on. The governments, they are still trying to adapt with the resurgence of COVID-19 in order to sustain proper economic activity and minimize its impact on the economy. Moving to the second factor, last week we had the monetary policy meeting from the Reserve Bank of Australia. The bank expressed readiness again to act if needed to support the economic recovery. So this doesn't have much an impact on the Australian dollars as it was expected. But still, like most of the central banks, we're going to talk now about the FOMC and all the ECB, most of the central banks are waiting some data, especially for the fourth quarter or the third quarter, to act further if needed. Also, Lagarde's speeches, she had a couple of appearances last week, and they affected the euro at a certain stage. But still, she just expressed some dovishness about the Eurozone outlook, and there is still much to be done to support a proper economic recovery. So this is still the range that the ECB is trying to get, or ECB officials are trying to talk about every time, especially over the weekend. A couple of officials, they also highlighted again there's a bit of slowdown in the economic activity in August and September. So this could be an alert to the European Central Bank to maybe act further. Powell's remarks on the economic outlook, here he was insisting or stressing on further fiscal stimulus before doing more from the Federal Reserve, but still the Fed will always support the economy and do whatever it takes in order to go back to pre-pandemic economic activity levels. FOMC meeting minutes also the same thing. So express readiness and willingness of the Federal Reserve to support the economy. The European Central Bank monetary policy also, they suggested to be freehand on the monetary policy, meaning that they are also open to further changes in monetary policy or adaptation of monetary policy, depending on the economic indicators or the economic activity, how it will perform in September and maybe during the beginning of the fourth quarter. So they're going to assess the incoming data in order to check how they will adapt to it, or how they will maybe change or tweak the monetary policy in order to support the economy. Trump's decision on stimulus. So there was a tweet from Trump last week stating that he asked his representatives to stop talking or stop negotiating a fiscal stimulus bill. So this had a pretty big impact on the market. We saw indices crashing, and also the dollar was strengthening for an instance. However, there would also during going to the end of the week, there were some changes in his tone, and then the market was able to recover again. So still, all the developments regarding the fiscal stimulus, they are impacting the market. There was some more optimism about reaching a deal between Democrats and Republicans. However, we are still a bit far away, despite Republicans agreeing on almost 1.6 to 1.8 trillion bill. But still, policymakers or lawmakers, they are hesitant to reach a deal before elections. Maybe we can see some standalone bills for the PPP, the Paycheck Protection Program, or some others to help the airline sector. But still, we aren't there yet. And also, one of the key movers that continues to be on the agenda of clients or investors, Brexit development, especially as we approach October 15. So any developments in this regard will definitely impact the market. We've seen the British pound recovering a little bit on optimism of maybe reaching a deal between the European Union and the United Kingdom regarding the Brexit. So this is playing in favor of the British pound. However, it will be very vulnerable to any changes in tone, especially that the European Union is seeking some proper punishment for breaking the trade deal. So this is all about the key movers that affected the market and could affect the market in the coming week. Some of them could affect the market in the coming week, definitely. Now we're going to move to highlight some of the top economic releases for the week. So we'll start with the economic calendar. On Tuesday, we start with the jobs data from the United Kingdom. We have the jobs data for August and for September. So the unemployment rate for August. But first, let's start with the average earnings index for bonus returns. So for August, expectations of a drop by 0.6% versus a drop of 1% in July. Unemployment rate for August, expectations of a rise towards 4.3 versus 4.1, and the claimant count change for September. This is the recent expectations that a claimant count rose by almost 5,000 to 78.8 thousand from 73.7 in August. Moving to the Eurozone, the German ZEW economic sentiment, a drawback in sentiment is seen in October towards 73 from 77.4. And we end with the consumer price index from the United States, expectations of a rise by 0.2% and CPI month-on-month versus 0.4% previously. So we continue with Wednesday. We start with the Eurozone industrial production for August, expectations of an expansion by 0.8%. This is what we're talking about. Like if you can see the difference between July and August reading. The August reading is 0.8, the July reading was 4.1%. So expectations to be 0.8, but the July reading was 4.1. So you can see how the expansion, despite having an expansion, but it's still it's very slow relative to the activity that we've seen or the rebound that we've seen in June and July. This is triggering some concerns to central banks. It's not happening only on the Eurozone, but in other economies as well. So this is just an alert to central banks to pay more attention for the indicators or economic indicators, and maybe to act before seeing a more drawback in indicators. So that's why all the indicators or economic indicators, economic releases that should be out in the coming weeks, they should be monitored closely since they could impact the market heavily. So this is from the Eurozone industrial production. I'm moving to the United States producer price index, month-on-month September, expectations of a rise by 0.2%. And then we have the API weekly crude oil stock is shifted to Wednesday instead of Tuesday since the United States is off today. So the API weekly crude oil stock. Moving to Thursday, we start early from Australia with the jobs figures, employment change for September, expectations of a drop by 35,000, and unemployment rate to rise to 7.1% from 6.8%. This could be very disappointing in case we see proper numbers such as this disappointment or this drop in employment and rise in unemployment rate. So this could add some more pressure on the Reserve Bank to act further to support employment. Initial jobless claims expected to rise by 825,000 versus 840 last week. Philadelphia Fed Manufacturing Index to drop slightly to 14.3 versus 15 in September, and the weekly crude oil inventories by U.S. Energy Information Administration to show a slight buildup of 0.294 million barrels versus 0.501 million barrels during last week. On Friday, the Eurozone, this is one of the key releases that you have to wait to watch out for, the consumer price index. If we see a disappointment or a negative reading for the CPI month-on-month, this could add some pressure on the euro, and maybe we can also see some officials talking about negative inflation or drop in inflation again. Moving to the United States, we have a series of indicators. We start with the retail sales figures, expectations of an expansion by only 0.7% versus 0.6% in July. In August, industrial production in September also to rise by 0.6% only versus 0.4%. Now, Michigan consumer sentiment to show a slightly tick to 80.5 from 80.4, and we end the week with the US Baker Hughes oil rig count, which rose to 193 during the past week. So that's the main concern. Economic indicators are expected to show expansion again, but this expansion is very minimal, very slight relative to what we've been seeing in June, July, and somehow August. So watch out for how the indicators will come out. Now we're going to move to the MetaTrader 4 platform to talk about some forward price patterns. First, we're going to start with the euro dollar, which is having a seesaw day. going to start with the weekly chart and then move lower to other time frames. So if you just see on the weekly chart, we had a sharp recovery for 2 consecutive weeks. The market recovered almost around 50% of what has lost. So the market dropped from 120 almost to 116, and we see that we're currently near the 50% retracement level. If we go to the daily chart, we can have a slightly better view on what's happening. So we're almost near the 50% retracement of the move higher. We were moving sideways up during the past couple of days. So if we just monitor the H4, we can see a sharp rebound here and then sideways up move. We're seeing higher highs and higher lows. So this is just indicating that the market's moving in an upside or an uptrend. So we better watch out for any reversal, maybe to post another lower low. So this could trigger some caution to some traders. So maybe we could be facing another change in trend. So this could be one trend line that could help you detect any possible reversal, and also you can draw another one which is combining these lows, and this could be a slight move as a channel that we've been trading in for the past couple of days. So these are the two formations. Mainly, it's one key formation, the channel that you can watch out for, since the bottom of the channel is combining a couple of times. So we hit this 1, 2, 3, 4, 5, and 6, and exactly on top 1, 2, and 3. So this could be very important to the price action. So watch out how the price will play in it. We're just gonna slide closer look on the hourly chart. You can see how the price is moving inside this channel. So any break above this could mean to further acceleration, which could trigger another resistance near the trend line combining the previous stop. So it's almost around 118.60, and on the downside, any break below 170.70 could be important for traders. Now we just dropped exactly to the support that was at a certain time resistance near 1785. So this could be the pivotal level for the coming for this week. So I'm just going to add some indicators and then redo this from the start. So if we go to the daily chart, you can see how the market rebounded from the 100-day exponential moving average, and we're trading slightly higher. The Bollinger Bands there is still open despite the drop in volatility, and also this is the trend line that we highlighted earlier on the RSI. We're still above it. If we just go to the H4 chart, also we're trying to find some support near the 20 H4 simple moving average, which is the middle band, and the price was finding some rejections near the upper band. So watch out how it will react in the coming one. And on the hourly chart, it was clear that the 100 to 100 hour exponential moving average that were clear, they were providing some support, and we're seeing bounce backs from these levels. If we just need to highlight some key levels for both scenarios, the positive and the negative scenarios, or the bullish and the bearish scenarios. So definitely first level to watch out for is today's low near 1785. This is a key level to watch out for. The next one comes in near 1720, and another one near almost 1687. So these are the three key levels on the shorter term, or on these like 2-3 days that we could test on further bearishness. So these are the key levels on the downside, and on the upside, definitely we have last week's high 1828, 1830, and after that we could highlight some further appreciation, and the views will be going towards 1920 resistance level. So these are the key levels if you are trading the euro against the United States dollar. Watch out also for how the price will react with the channel that we highlighted further. Now we're going to move to the British pound, which is trading above the 130 psychological level. If we just go for the weekly chart first. Just go to the weekly chart first. You can see how the market's also was also recovering for 2 consecutive days, whereas we're a bit bullish on the week. On the daily chart, also consecutive days, despite opening on a gap lower today, but still this is showing some strength. There's a formation that could be an inverted head and shoulders, or shoulder, head, and the right shoulder. So this is a key level that we're trading at, but still it's not showing a proper momentum. So watch out how this will play. On the H4, it's a bit clearer, so we can draw this trend line here. And there's also another trend line combining the previous stops that we're currently almost trading at, so we're almost having a wedge to the upside or rising wedge. So watch out how the price will come and play here. If you just draw the Fibonacci retracement, we are almost closing into the 50% retracement, which is also coinciding with the upper side of the wedge. So 130.80 could be one of the key levels. You better watch out for any resistance near 30.80. We can also highlight the previous stop near also 32.64. And on the downside, we need to pull. We need a drop or at least closure below 139, which could lead to a further drop or a further depreciation towards 128.45, and after that, a previous low near 126.77. So watch out for a higher volatility on the British pound pair, especially as we approach the deadline for negotiations. So this could trigger some volatility on the pound pairs. I'm just going to add some indicators and then go over again. So we're trading near the upper band of the Bollinger Band after the bands being like compressed towards each other, especially after the consolidation that we witnessed during the past couple of days. Moving to the H4 chart, we're trading near the upper range of the Bollinger Band. Expect some if we're going to trend, you better expect some bounce back to the moving average and then supports in the market to move higher if this is the scenario, or in the case of a bullish scenario. And in the case of a negative scenario, you have to watch out for the break of this trend line and how the bands could be moving again, and maybe we could be trading near the lower band. So these are the two applicable scenarios for the British pound against the United States dollar. Moving to the dollar against the Japanese yen, I'm going to start with the weekly chart. We're seeing some move on the pair. Well, still, it's on the bigger picture. We're still inside the bigger range near 104 and 106 level, almost 106.50. So on the bigger picture, we're still trading inside this range. And here you can just draw this trend line where we got some rejection to the past move. And if we're just going to highlight some key levels on this 4-day time frame, we definitely have to point out for the latest low before the bounce higher, 104.94 and then 104 level. And on the upside, the rejection from the trend line or 106.10. And after that, we can also settle a resistance zone near 106.93. So these are the key levels if you're trading dollar against the Japanese yen, 104.95 and 104, and from the upside 106.10 and 106.93. I'm just going to add indicators. So on the weekly chart, we're still trading inside the lower part of the Bollinger Band. On the daily chart, we had a rejection from the 100-day exponential moving average, and now we're trading below the 20-day simple moving average, the middle band of the lower band, and the RSI is moving lower again. On the H4 chart, the bands are widening with a move lower, so we're breaking lower, and the RSI is approaching the 30 level or almost trying to cross below the 30 level. So watch out how this will come and play. So maybe we can witness another drop to this level and then have some consolidation. And then this will depend on the drivers, whether we can see another low here or we're just gonna move again higher and maybe go to these levels. So watch out what's the positive scenario for the dollar yen in the coming days. On the hourly chart, we're trading near the tighter band or the lower part of the Bollinger Band, which is very tight here. We're trading in it, and especially since the move is a bit steep, despite slow movement, but it's a bit steep relative to the previous year. We had a bit of consolidation, and then the market was able to break below it and move towards lower levels. So watch out how this will come and play. Any rejection or any first reversal could be just highlighted by drawing, by just pointing a draw here and this level, or just you can draw another trend line. That could be this. So any reversal back above this, these RSI trend lines could mean that the price could be heading for a bigger correction of this move lower from 106.10 almost to 105.30. So this is for the dollar yen against the dollar against the Japanese yen. Moving to the USD-CHF, which is almost having similar scenario to the euro dollar, but the Swissy was a bit stronger. So if we just go to the daily chart, we can see that we had a steep reversal, almost erasing all the gains earned during the past trading weeks. We just had the 78.6, no 78.7, 78.6 retracement or 76.4 retracement. We're almost trading near it currently, and And this is just showing some strong some strength for the Swiss franc against the United States dollar, especially that we're witnessing further lower lows during this move, and it's a bit steep. So any reversal, we need to at least go back higher above to clear above 91.60 again in order to have some insight on a further move or a further reversal to the upside. But currently we're still a bit bearish on the pair. So you can see the dollar is weakening against the Swiss franc, and it's very clear if we just draw this trend line here. So following the drop, we saw a sharp move. So any reversal towards this trend line and break back above this trend line or the falling trend line could be that could mean that we're just reversing on the trend, and maybe we can go back to retest at least 91.90 or 92 level, which is also a key level previously. So watch out how the price. What I'm trying to say is it's either we're gonna try to bounce back to these trend lines and maybe bounce back here and then stall near the resistance level, or we just can continue towards the coming resistance and coming resistance zones that are available near the psychological level of 0.9. So these are the two scenarios that you could be supporting. If we just add some indicators and just do this all again. The daily chart, we're just approaching towards the lower band of the Bollinger Band. It's settling near almost 0.9068, or RSI is still near the 40 level, so it's almost on the sides of neutral. Moving to the H4, we're trading, the bands were widening and we're trading near the lower band, and also the lower band is currently near almost 0.9076, so almost 0.9070 between the daily and the H4. Moving to the hourly chart, the consolidation during the past couple of hours brought Bollinger Bands close to each other. So this means that traders could be waiting on the sidelines for a certain break. I'm just going to remove these and highlight the key levels that you can watch. So on the upside, 91.30 first level, and after that we can go for a 91.96. And on the downside, definitely the previous low of 90.46 and then the 90 psychological level. So these are the key levels to highlight for the dollar against the Swiss franc. So any break above 91.30 could trigger another move higher towards 91.92 or 91.95, and then maybe we could see some consolidation here and another break higher. Else, if we were able to continue trading below 91.30, we could be heading towards 90.45 level and 0.9 psychological level. Moving to the Australian dollar, we're going to start with the commodity currencies. So moving to the Australian dollar on the daily chart, we can just first draw the trend line that we talked about last week. So we highlighted this trend line and the market stalled on Friday near this trend line. Now we're seeing a bit of reversal. On the H4 chart, it's a bit more clear. So we had here a double top formation. The market moved lower on this formation, then bounced back higher after a bit of reversal near almost the 50% retracement. So the market moved a bit. So now we're stalling near the trend line. So in order to have a bit more optimism or a bit more bullishness on the pair, we need definitely to cross above the trend line and clear the previous high of 972.40. And after that, we could be thinking of another move higher towards 73.45. And on the other side, on the bearish scenario, we have to watch out for any visit again towards 70.96, and after that the 70 psychological level or rounded number. So these are the key levels if you are trading the Australian dollar against the United States dollar. Watch out how the price will react to the trend line if we were able to trade near the trend line again. So there could be some possibilities that we are removed in a certain consolidation, then retracement, another move higher, we have a consolidation here, and then we have another move higher, or this could be one of the scenarios, or we're just having like a correction 1, 2, 3, and then we're moving back lower again to move for another dip. These are the two scenarios that could be coming into play. So by adding the indicators again on the daily chart, we're still above the 20-day simple moving average and above the 100 and 200-hour exponential moving average. On the 100 and 200-day exponential moving average. On the H4, also it's very clear that we're still above the previous top. But on the H4, the Bollinger Bands are so wide, So this could mean that we could be heading towards a bit of consolidation as the market misses some of the drivers. Moving to the hourly chart, we're trading near the lower band of the Bollinger Band after trading near its upper band for almost a week, and now we're witnessing some recovery. So you can also use the Fibonacci retracement to check where could be the top levels for retracement. So currently we're trading near the 23.6 retracement level. Moving to the New Zealand dollar. So we'll start with the daily chart. We're trading almost sideways. We had another higher high positive than last week, but still we're lower than the previous double top that we were witnessing. On the bigger picture, we're still trading inside the consolidation zone between almost 65 and 64.70, and on the upper side the 67.97. So it's almost the 300 plus pip range that we're trading in. Awaiting some maybe fresh drivers, fresh fundamentals that could drive the pair out of this 300 pip zone. Moving to the H4, just a bit closer, so we had to highlight some of the key levels. So definitely for another move higher, we need to break above the recent high of 66.70, and we could be facing some resistance between 66.70 and the previous top near 67.30. So this 40 pip zone could highlight some key resistance here. So watch out how this will come in play. And on the downside or the negative scenario, we need to break back below the 66 level for further bearishness and drop towards 65. So these are, I'm going to highlight them again. So these are the key levels to watch out for if you're trading the New Zealand dollar against the United States dollar. I'm going to add the indicators. So on the daily chart here, we're finding support near the 100-day exponential moving average. Any break below this 100-day exponential moving average could lead to another drop towards the 200-day exponential moving average, and then we could see maybe another bigger correction towards the 63.80. Else we are poised to retest the highs. On the H4, the RSI approached the 70 level and then retraced slightly, but we're still in the middle range between 40 and 60 level. On the Bollinger Band, they're so wide, especially following the sharp move that we occurred late on Friday, and now we're having a bit of correction. So also you can use the Fibonacci retracement tool to check the correction levels, and currently we're trading near the 23.6 zone. So watch out how the price will continue from here. On the H1 chart, also we're still we crossed back above the 100 and 200 hour exponential moving average, but we're trading near the lower band of the Bollinger Band following this consolidation. Moving to the USD CAD, I'm just going to also do the same. I'm going to highlight the key levels and then go for the Canadian dollar was among the strongest currencies during the past week, and we saw that the move that took almost 2-3 weeks to form, or this correction that took almost 3 to 4 weeks, it was the pair erased all the gains in just 2 weeks. So we had a sharper move lower, and especially the past couple of days. So Wednesday, Thursday, and Friday there were sharp losses on the pair. So we just need to highlight some levels. Definitely we have to look out for the 130 psychological level, 129.84, and on the upside we need to highlight the previous resistance near the 32.60 level ahead of. So the 32.60 level ahead of the previous top or double top that was formed near the 34.20 level. This is on the upside, and on the downside of the 29.84, you can just either look for previous lows here, or you can just draw the extension and you can see where we could be heading. So if we're just gonna draw the extension for this one, you can go for a 29.23 zone. So this could also provide some of the resistance. This also coincides with the previous lows that were mentioned. So if you're just looking for a potential reversal zone, you can draw this in order to check where the wave here could end. So this is for the USD CAD, the dollar against the United States dollar. I'm just gonna add the indicators and start with the daily chart. We're trading near the lower band of Bollinger Band. So we need some catalysts maybe to have a sharper move or a steeper move to the downside. Else we could find some rejection here, another move higher, since here we have a minor support zone. So maybe we can find some resistance here as to support here, and then we move back to the middle of the band and then have some sideways trading Since here the move was capped at 100 and 200 day exponential moving average, so any sideways trading will make them more vulnerable for any break to the upside. Just go for the H4 chart. It's it's showing a very steep drop that took place last week. The bands are so wide, and now we're consolidating inside a certain range. So it's either we're gonna drop further towards the Bollinger Band, the lower Bollinger Band, or we could be poised for a bigger correction here and then move sideways. The RSI is showing an oversold territory, but still, this doesn't mean that we couldn't be going for another dip on the RSI. Maybe look for some divergence. So watch out for any divergences here. So lower low and the higher low on the RSI. So maybe this could be one of the key reversal signals that you can benefit from. Moving to the H1, it's very clear we've been trading near the lower band, the lower part of the Bollinger Band for a couple of days, and now the Bollinger Bands are closer, and traders are waiting again for a breakout out of this zone that ranged here between almost 31.30, 31.40 and 31 levels, so this 40 pips range. So this is showing another break. So you can also always use RSI for confirmation on a certain break, since it can show you some moves ahead of what we can see on the price. So this is for the USD CAD. Moving to gold, starting with the daily chart. So the gold did benefit from the dollar weakness last week, especially following talks of maybe a possible deal on stimulus, especially on Friday. So this was supportive for gold, and we're seeing gold rallying almost $20-30. So there are two trend lines that you could draw. One of them was already broken. So 1, 2, 3, we got a rejection here, and then the market traded above it. So maybe we can witness some reversal here and then another move higher. This could be one of the scenarios. So either we have a little bit of a correction here and then another move higher. You can also draw another trend line, which was the upper band of the channel that we also were closer to it today. So watch out how the price will trade between these two key trend lines. And on the downside, for another reversal of this move, you can draw also this trend line that was combining recent top. So if we just go closer on the H4 chart, this is what you can see: 1, 2, 3, and this rejection here. So now we're inside the consolidation zone. So you better watch out how this will come in play. Also, you can draw a channel here, so you can see where could be the upper band if we are forming a straightened channel, where could be the upper band, which was almost tested earlier today. So this is for gold. Let's highlight some of the key levels other than these trend lines. So definitely 1900 remains a key level on the downside, and after that we have the 1875 zone, the last stand that we tested before this move higher. On the upper zone, 1970, 1976 at a closer stage, and after that we could be looking for 1990. So the trend line definitely would provide some resistance here, which is almost 1940. So this could be coming to play. These are the key levels to watch out if you are trading gold. On the downside, 1905, 1875, and on the upside, 1940, which could cap any move higher. Then 1975, we were able to clear above 1940, and then 1991. I'm going to remove all these lines and then add the indicators. So you can see here on the daily chart how the Bollinger Bands are closing, and especially after this sideways move up. So traders could be looking for some surge in momentum during the coming days, which could be definitely any news about the stimulus could be one of the catalysts. On the H4, we could be looking for some retest to the 100 and 200 H4 is not moving average, which resistance here. So maybe we could be facing some retracement here, which is also coinciding with the trend line that we drew earlier, and then maybe we can move higher. So we have a couple of indicators into the same level, almost 1900, 1905, and on the hourly chart, we're just moving higher. 1, 2, 1, 2, 3. Currently, we're in wave 4, so we just this retracement, we're almost near the 23.6 retracement level. Watch out for the levels that we just highlighted, and stay tuned for any headlines regarding stimulus, as they might impact gold. Moving to silver. On the bigger picture, we're still trading inside the channel that we drew earlier, but Now we're able to break above the trend line that's combining the previous stops here. So watch out how today's close will be. So if we get some positive momentum in the market, maybe we could be rising towards the upper side of the channel. That could be near 2650. But first, we need to clear above the resistance zone that was support at a certain time, which is almost near 2570. So 2570, and then almost the upper side of the channel near 2685 and 27, and on the downside, any reversal to 2447, any break below 2447 could trigger further bearishness on silver towards 2284. So these are the key levels to watch out for. I'm just gonna repeat. So on the daily chart, nothing much is showing unless just this trend line that gave a clear signal for a move higher here. In silver, almost $2 move triggered, or just you could just have a look up at it following this break of the trend line of the RSI. On the H4, you can see that we're tracing towards 200 H4 exponential moving average, which acted as key support previously. So you can see how it acted 1, 2. So I'm just going to highlight them. So if you just see how, and currently we are trading near it. So watch out how the price will play in the coming hours, and based on that, you can just either stick to your trades if you're long, maybe, and then we witness another move higher, or you need to close your trades and then maybe wait for another dip or another more clarity on what could be forming on silver. H1, we've seen divergence or just a sharp move higher from the 100 and 200 hour exponential moving average, and the Bollinger Bands, they now closing into each other following this consolidation for the past couple of hours. Moving to oil, and then we end with the Dow Jones. So on the bigger picture, we're still inside this consolidation zone. Almost a $5 consolidation zone. We could be still trading inside the zone for further, unless we have more fundamental drivers that could drive the prices out of this zone. But on the bigger picture, we're still trading inside this consolidation zone, and traders would be looking to sell higher highs and buy lower lows as long as we're inside almost this region here between 43.90 and 36. One of the key or pivotal levels could be 39.15, which acted as support here before the move lower. So we find some support 1, 2, 3, and 4 times before moving lower towards 36. And then also on the break higher, we retraced towards 39.15 and then moved higher towards 14.47. So these are the key levels to watch out for if you are trading oil. Just gonna move to Dow Jones, and then with the Dow Jones, which is having a good day today. So the optimism over stimulus just drove the prices higher. We can see here how the prices found support near the 200-day exponential moving average, and now we're trading near the upper band. We had a retracement towards the 20-day moving average, and now we're trading near the upper band, just looking higher towards the previous high. So this is the CFD, the Dow Jones, not the futures. So we're just looking for the 29,219. We're currently near 28,700. So if we just have a bigger picture on the H4 chart, just to highlight some key targets. So as long as we're above 28,360, we're in a positive scenario or a bullish scenario towards higher high. And if we were able to break back below 28,360, this could trigger a further drop towards 27,230. So this is these are the key levels for the Dow Jones. If you're trading Dow Jones, watch out. We're approaching on the H4, approaching the RSI 70. So this could mean that there could be some acceleration in the move here, and this could be brought by any headlines concerning stimulus. So watch out for any headlines for stimulus that could move the markets or move the Dow Jones either ways, either to upside or to the downside. This is all for today's session. If you have any questions, please write them down. Just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. We're just trying to show you how you can do your own analysis by using some technical analysis tools or by looking for some patterns in order to help you throughout your trading. So if you just have any questions, please write them down. Perfect. This is it for today. Thank you all for watching and have a safe trading.